Now, traders at UBA say market players continue to sell down their positions for profit taking as the year winds down. And I have Gbemi Bello-Aromire, a fixed income dealer at UBA. She joins me as we wrap up the market for the week. Thank you so much for your time on the show today, Gbemi. And let's look at the kind of week we've had in the market. What are the sentiments so far?
Thank you, Ken, for having me. It's been a week full of auctions from both the DMO and the central bank. So a lot of the activity has been shaped around this auction. So the week had started on a bearish note where we saw a lot of sell down ahead of first the NTB auction. If we can all recall, the NTB auction last week did 3.2 at the 364 days. This move by the DMO prompted market to reprice, and we saw yields go up that week. When we came into this week, we saw a lot of dealers repricing their yields to higher levels, and we saw a lot of sell down, as you rightly said, for profit taking. So this week, when we had the NTB auction, we saw only 7 billion on offer. However, the yields slid down across the two high maturities, while the 91 days moderated slightly higher to 0.048. The 364 days dropped to 1.139 from 3.2. Subscription was still very high across all maturity, and especially on the 1 year. We saw 93 billion come for the 1 year, and only 3.8 billion was sold. If we look at this auction, we saw that the market came with mixed sentiments, because we saw a lot of auction rate at 0.4, while we also saw some go as high as 6%. What we continue to see is that a lot of people feel these yields would eventually reverse, hence the reason why we saw high yields, while we see some that would like to not keep idle funds in their account come to the auction at 0.4 level. There was OMO auction yesterday, and the stop rate also slid across all the maturities that was offered. And we saw 1.65, 4.5, and 6% across all the three maturities that was offered at the auction. We saw CBN sell 80 billion as against the usual 70 billion which they sell. Today, market was rather on a calm note. The bond space reveals that participants adjusted their offers based on the outcome of Wednesday bond auction. At the bond auction on Wednesday, we saw the 2035 and the 2045. Which was offered both 30 billion each, and we saw the top rate inch higher to 6.945 and 7% respectively on the two offers. Before the auction, we still saw a lot of sell down, because market perception, as we said earlier, is that yields will continue to trend higher. I beg your pardon. However, participation was low at this auction compared to November auction. So this has been what has shaped the market this week. And going forward, we expect that yields will continue to go higher as we continue to see a lot of sell down.
All right, then. Thank you so much for that breakdown on activities in the fixed income and FX markets. Gbemi Bello-Aromire is a fixed income dealer at UBA.